Hi, I'm Patrick Reed from the Adamas Principle. Some big headlines overnight. Pompeo, never been so critical of China. As consulates get closed left, right and centre, people are just retaliating. So risk had a wobble. Look, this has been brewing for quite some time. And the goldfish, FOMO kind of retail crowd have finally, maybe the pennies dropped. You know, the algos, they've actually started to read into this. This along with the US economy, potentially looking at a W, definitely not a V. So the data still bouncing, but in the US. But look, this is mainly pre-second wave COVID-19. So let's just see what happens to the next non-farm payroll. So let's look at the first chart, Eurodollar. So Eurodollar here, look, we really went north after this 114.49, which is the Fibonacci on the 50%. We really have not stopped, and we've chopped around, but really arched higher. Now, Aussie, which is the next chart after that, but we're not there yet, but Aussie just absolutely on steroids. Euro caught up. This was after a bit of a lackluster EU rescue at 350 billion. I think, you know, the markets would have loved that 500 billion but in grants, but never quite got there. But then it really did play catch up after the other dollars got sold off. You know, structurally, we are a bearish dollar, but the risk off certainly wobbles in risk anyway should have dollar spiking. But today, recently, dollar's still quite weak. Dollar yen fell out of bed. So let's just look at Aussie. Next chart, please. Aussie got hit, and dollar yen really tanked and brought Aussie yen down with it. You know, the risk plays in full effect here. So the bottom line here is we're still some way off the highs. You know, this 70-30 to 70-70 is key to stay above and close above on the daily. But obviously there's two kind of flags forming here. There's a bull and a bear flag. Let's just see if we stay above this 70-70. I think if we do close below this 70-30, it could get really ugly for bulls. Below that is 69.23. So really, the next chart. So really, the talk of the town here is our old friend dollar yen. Enough was enough, and finally, it actually started to sell off with risk. Okay, so this 106.48 cracked, the 106.66, you know, near to a triple bottom cracked. And as long as we just stay below this 106.48, you know, you could potentially see more downside. But it's just not looking great. It is Friday, it is the weekend. People probably not wanting to be long any risk in the weekends. So this is quite important. Dollar CAD, look, see the arrow? It points to a perfect place to resell expensive dollars. This was work to charm. However, this 134.88, really big level around that area, really big level on the daily and the 4 hourly. Now we're kind of grinding up, kissing that mid-Bollinger Band. Not really sure where to go here. If it does ratchet up another leg in risk off, then, you know, you could see this spike up to testing this 134.88, 134.90 area. But at the moment, it's pretty quiet market. It is Friday. And our final chart today, yeah, Rand Yen. I quite like looking at this for a mix of EM and G10 risk. Really at this point, 6.3229, and let's just see what happens. But, you know, at the moment, you know, if this does ratchet up, I see more retaliation and harsher critics will come out on both camps up until November, because let's face it, I believe Trump is trying to do this potentially to break things so he can make things better, to give him a lead on Biden, who, let's face it, is really storming in the lead at the moment.